Hello, welcome to another talk on money, business, and investing. My name is Ozan, the founder of the company here at Master Investor. Welcome and sure to subscribe to our community. Turn on the notifications so that we know when we go live or upload a valuable talk that can literally change our finances forever. As long as we apply the information that we're learning every single day into our business plan, because investing is having a plan. That's how we define investing here at Master Investor. It's all about understanding the entire investment operation, how to exit that investment successfully, having an exit strategy, and being able to create passive income, not only using our own capital, but using other people's money, OPM, or also known as debt. There are two types of debt that exist: good debt and bad debt. Good debt goes hand to hand with assets because it creates passive income and it helps us lower taxes because debt comes with benefits when it comes to our taxes. Since money is created with debt, as we learn here at Master Investor, President Nixon on August 15, 1971, separated the gold standard from the US dollar. From that point forward, money became monopoly money, fiat money, fake money, and just an idea backed up by confidence. It is important to go back into history and learn about the evolution of money because, as we know, money is always evolving and the economy is always evolving. It goes up and down. As an inside investor, we understand that we can make money in any type of economy. The market doesn't determine how successful we are. We are the ones that determine that because we are responsible based on our level of financial education or financial IQ that we have and that we possess. That's what's critical, that we continue to invest in financial education, because business is something that we have to learn more and more each day to polish our craft, to be able to see deals and acquire bigger deals that create passive income, minimizing taxes, and giving us all the goods that comes with building a successful business on the right side of the cash flow circle. Remember, there are four types of people in the world of money. We have employees, then we have the self-employed, we have the business owner, and we have the inside investor. On the left side of the cash flow circle, we find the employee and self-employed. These individuals, they work hard for money. They work for the type of income that we call earned income, which is taxed at the highest bracket. They are actively selling their time for money. And they always have a limit because they can only sell so much of their time each day, as we all have 24 hours. So this type of income is quite difficult to become financially free. To be able to reach the level of financial freedom that people are looking for, we need to focus on a different type of income, which is passive income specifically. The other type of income is capital gains income, which we also will have as we learn to invest and continue to grow our portfolio. However, rule number one in our community here, Master Investor, is that we work to build passive income and multiply money through sound investing. And that money could be in the form of debt, in the form of a loan. It could be a pool of different investors investing into our deal, because we are putting deals together. We are the ones that are finding deals, putting the team together, and raising capital. The job number one of a business owner, an inside investor, is to raise capital, and then we got to use that capital to invest for passive income. That's the job number one of a business owner. And the job number one of an inside investor is to multiply that money, to put it to work. So we need to combine the mindset of a business owner and an inside investor. As we raise capital, we already have a deal because that capital was raised due to the fact that we have a good deal. We have an asset that people want to invest in. It could be other people's money. Like I said, it could be the bank's money. It could be private investor money. It could be family and friends. It depends on how we set up the deal. But we need to remember, we are here to raise capital legally, and we are going to master how to do that successfully because money will find us. There's not a shortage of money. However, there is a shortage of people being financial literate, right? Too many people lack financial education. And so we need to gain financial education because knowledge is the new money. Knowledge is power. Debt is created due to the fact that we print money because money is attached to debt now. It's not attached to gold. So money is debt. And we can say debt is money. We got a debt like we treat money because it is a currency. So today, let's make clear that money is created with debt, and today's money is a full currency. And that means that in order to maintain its value, whatever is left on the dollar, it must move from asset to a cash flowing asset. And from that cash flowing asset, we need to reinvest it back into a different asset in a different asset class as well. It's not just diversifying in one asset class, as many business gurus will explain out there today, which we want to avoid doing that because that is a recipe for disaster. If a person or investor has all their eggs in one basket and that market crashes, that investor loses everything. We need to diversify among the 5 asset classes that exist today. And those asset classes, we cover them all the time. Number 1 is real estate. Number 2, business. Number 3, crypto. Number 4, paper assets. Number 5, commodities. Not all the asset classes will give us passive income. Majority of them will do. And some assets will give us capital gains income. However, we will know exactly what type of return on investment and what type of income we are getting from that specific asset even before we invest, because we have a winning plan at hand with an exit strategy that is lucrative for us and all the partners involved in that specific investment. And we need to go out there and network as well, because it's important that we get in contact with new people that are aligned with what we want to do. Maybe we find a new client through them. Maybe we find a new partner through them. So it's a good habit to expand our networks with the right people, because as soon as we connect with somebody, now we're connected with their network. And now all we have to do is provide value to that person, figure out what they need. We're always looking for things. As human beings, we do, right? We're always looking for solutions. So it's all about putting that product in front of the right group of people so that they can grab, purchase, and repeat that process again. Today, we have technology, we have artificial intelligence that can literally help us do that very easily and also fast. It doesn't have to take forever for us to become financially free and build true wealth. It can happen very fast. However, we need to shift our core values regarding money. We need to update them with the new rules of money. We need to adopt the wealthy context. 2 types of mindset when it comes to money. We have the poor mindset and the wealthy context. Okay, the wealthy mindset. That's what we want to focus on, grabbing that wealthy context, making it ours, operating with that, and investing actively in sound assets that we control with our companies. Today's topic is going to be how to avoid Ponzi schemes. The key to avoid fraudulent business operations is to be financial literate. Ensure to go to our website to have access to our newsletter. Whoever wants to get this talk on writing via email, make sure to subscribe to the newsletter. And we can also read it. We listen to it, we read it, and we learn even more, and we can create more wealth because now we have more knowledge. So make sure you subscribe to all other social media platforms that we have. Go to our digital courses, get our 3 ebooks, How to Build Cash Flow with the Internet, Turn Passive Income On, the 10-year rules of money, and how to invest in crypto to build wealth. We'll be releasing our 4th ebook and digital course very soon. It's called How to Raise Capital to Build Wealth, because the job number 1 of a business owner is to raise capital. And the number 1 skill is to sell without selling, using smart marketing and systems, meaning that we don't have to sell personally because we have systems in place. There's a difference when it comes to building a successful business that runs on itself. And that's what we're mastering here at Master Investor, is to actively acquire real or build real assets that can make money on their own, because otherwise they wouldn't be called real assets. They'll be fake assets. And we're going to talk about fake assets and fake business operations that appear to be real on today's topic. Summary. Certain Ponzi schemes are legitimate and backed by the government. Keep in mind that the rules are set by those with the money. However, the rules are available to everyone, regardless if the person has money or not. It means that the rules are in favor to the one that learns how to multiply money through capitalism, because this country, at least the United States and majority of the world, is run on the capitalist system. And it's the best system because we can all become whoever we want to be, as long as we're solving a problem in the world successfully, a problem that needs to be solved. And we can also learn from others as well, and we can innovate with what they already are offering and providing better services or products to the marketplace. We need to build true brands. It's not just building a business because anyone can replace a business. We need to make sure that we are protecting our assets with our legalities. That's how we add intrinsic value into a business, is by ensuring that we are protecting what we create to the world. So if we need a patent, we make sure that we file that patent. We need to pay the attorney to do that. And we need to have the right group of people helping us protecting all of our assets, intellectual property, etc. So no one else, our competitors and whoever, cannot take that away from us and create something of their own. We need to protect our company and turn it into a real brand. And we do that by using the legalities that must be in place in order for that company to be protected 100% from predators and competitors. And then we need to have business integrity. That means that the business must be created to raise capital, to make money, to make us wealthy. That's the whole purpose, to solve a problem. And because we're solving a problem successfully, we get rewarded. The business needs to be profitable because we need to pay everybody involved, our staff, the systems that we're using. We need to put money into infrastructure, to develop new systems, to help the customers with more solutions. We may branch off and create more products for the customers because now we have a close relationship with them and we are learning more about who they are and what other problems they have. And therefore we can serve that market by understanding more of our clients, our niche, which is very important. We don't really want to be speaking to everybody unless the brand and the product that we are building, the brand that we're building, can speak to everybody. You know, if it's a drink, if it's a water, then we can probably speak to everybody. So we need to figure out what is our niche, what type of products we want to bring to the marketplace. Do we want to create the product from scratch? Do we want to innovate? Do we want to use white label? We need to start thinking and start writing and start creating a business plan, because investing is having a plan. The secret to staying out of a Ponzi scam is to educate ourselves. At the end of today's talk, we will cover our bonus question: what are tax deductions versus tax credits? Discover legal ways to maximize our wealth via taxes. We don't have to be stressed about taxes like majority of people tend to react when it comes to tax season. We need to prepare for taxes ahead of time. We need to have a tax strategy that can help us minimize taxes, because we are allocating the funds that we're getting from our businesses and investments to the right places where it's aligned with the law, with the corporate law, to minimize taxes all the way to zero. And we are using debt. And as we know, generally speaking, all debt is tax-free due to the fact that today money is created with debt. And the government prints money every single day in the form of debt. And Some of it gets pushed out into the physical world via the cash or the real or the fake paper that we have, because it's fake money. That's monopoly money. There's nothing back in it. It used to be gold, but as we know, and we have said here on our podcast and everywhere on our talks, we understand that in 1971, August 15, that's when President Nixon separated the gold standard from the US dollar, which is a very important year as money becomes debt, which is music to the business owner and inside investor, or at least to the new business owner and the new inside investor, because it gives us more opportunity to become wealthy faster than ever before. And technology and artificial intelligence plays a big role on that happening for us as we build our portfolio, as we build in our team, as we build in and acquiring more assets that produce passive income. We will create more freedom and we will create more true wealth because we are learning to utilize money correctly, and we can acquire any liability as well. It's not just about the assets, but we are going to approach the way we acquire liabilities with a wealthy mindset. If we want something of luxury, we first focus on an asset that will pay for that liability, and we can have it for free because we can have as much as we want because we have an asset now that pays for that liability. It's not just working at a job, earning the money to pay for the things that you want. That's the poor way to do things, is the hard way. And as we call it, is the rat race. Now, if a person loves their job and they enjoy and they find value in what they do, then by all means, stay in that job. However, we encourage everyone to still learn how to invest because at some point that person may not want to continue working there and may want to experience something else or have freedom and just travel the world. And now that person spend majority of the time working to build their asset column on their side when they have free time. And now by the time they reach retirement, they really have a retirement account that they can control, not a fake account, not a 401k, no, a real business account full with assets that the person controls, a real portfolio that is creating passive income to the individual and sometimes capital gains income. But the purpose and the message of today's talk is that we all begin to invest actively. We get involved in the game and we need to multiply our money. We need to understand how to build a business, how to incorporate our company, how to trademark our logo, how to create a successful business and multiply money as we grow our bottom line, or also known as positive cash flow. The most important words in the business language are cash flow. Remember that, which means passive income. Every investor, every successful businessman will always want to know, what is my passive income after I put this money to work? How much money am I going to get back? What is my return on investment? And guess what? We measure that return on investment with facts. We never go with opinions. It's not a guess or I pray that we're going to get this. It's never like that because that is a lack of financial education. If a person is investing without a business plan, then that person will pray that the market is going to go up, right? And they're going to make good profits. That's not what we want to do. When it comes to successful investing, we know exactly how much money we're going to get back, when we're going to get our money back, what is the passive income after we obtain our money back, and thereafter is infinite return on investment. And that's the holy grail of investing. That's when we have no money of our own invested into the deal. We recoup the capital that we invested initially back, and then we continue to control that asset, continue to collect the passive income, and we have even more passive income now because we recoup the initial capital back. And now it's free money, it's money for nothing. That is the holy grail. That is called infinite return on investment. I want us to remember the most important words: cash flow, or positive cash flow, or also known as passive income. And the second most important words are due diligence, because we have to do the due diligence in order to go based on facts, not opinions. The difference between facts and opinions is one of the main difference between the wealthy mindset and the poor mindset. It's what creates the difference between them two, right? We, the wealthy mindset, we know how to invest with facts because we can read the financial statement of every business, and we don't invest without a plan. We know who is in our team. We study who are those players, who are those team members. We know everything about the business. And we know that we are going to invest for a return on investment that we're looking for. And that return on investment is calculated with facts based on the numbers and everything that we learn, no opinions from the salespeople, whoever's trying to get us to invest, but from our due diligence. So doing due diligence gives us the opportunity to detect whether something is a toxic investment or something is an asset. So there's no reason for us to be skeptical about any type of business offering because we have financial education. Okay, we can read the financial statements, we can do our own due diligence, and no one is going to tell us if that's a good asset or not, because we have the answer ourselves. We can read financial statements, which that's the foundation of true wealth, is the ability to read financial statements, starting with a personal financial statement and improving that financial statement. And every business or investment has a financial statement, just like every person does. Even though a person may not know that they have a financial statement, they do. Everybody's dealing with money, and everybody is either creating earned income, or they're creating passive income or capital gains income. Those are the three types of income that we can create. Majority of people focus on creating earned income, and that's why they struggle financially, because today saving money is not a good idea without a plan. Saving money should only be happening if the person is putting that money into an investment saving account. In other words, that they're putting a certain amount of money to the side to acquire a real estate property that they're going to turn into an Airbnb, using the bank's money and using a little bit of their down payment that they're putting to the side. That is about it, right? We don't want to become a saver, because that money is going to other investors that know how to raise capital to put it to work, because the banks are looking for people that know how to put that money to work. So savers are losers in today's economy due to the new rules of money, because money is not backed up by gold anymore. And then good debtors are the new winners. So we need to learn how to get in good debt, how to get in debt. You know how people sometimes they say, be debt free. That's how you create wealth. That is not how to create wealth. That's insanity when it comes to building wealth. We want to be in as much debt as possible. And if a person is in a position where they only have bad debt, then that's a rough position, because that person may be getting calls all the time, etc. There's a way to fix that. And the best way is to first invest in financial education and start building a plan to acquire the first asset that will create passive income, so that we can pay for that first liability or whatever is creating that bad debt, and start taking that bad debt off our back, because we have good debt paying for that bad debt. So we don't feel the bad debt, and we don't feel any liabilities, because we are creating assets and acquiring assets that will fulfill the payment of any liability that we have or we want in the future. So it's not about shrinking when it comes to building wealth. It's not about saving. It's not about going into a corner. No, it's actually the very opposite, about expanding, starting with our knowledge and our financial IQ. On one of our digital courses, How to Build Cash Flow with the Internet, inside of that digital course, we will find a financial statement that is blank. The reason we added that there, because as we learning more about business, we come to a conclusion that it's all about reading financial statements. It's starting with a personal financial statement. And majority of people have never filled out a personal financial statement. Yes, they make money, they have a bank account, they're getting the paycheck, but they have never seen their money flow through a financial statement, which it changes the perspective, and it gives us an eye-opener when it comes to building wealth. So we added that financial statement where it can be downloaded into Excel. Make sure you go to our website, sign up for the How to Build Cash Flow with the Internet, Turn Passive Income On digital course. And as we added more assets into that specific digital course, it comes with an ebook. That course has an ebook of 49 chapters, 580 pages of financial education, a step-by-step guide on showing how to build a successful business from scratch. Literally takes you by the hand, and it gives us all the tools that we need in order to understand how to position ourselves with a system of systems in the marketplace to build passive income and create more passive income ultimately, and how to take any business to the next level, because we share many different references, tools, and strategies that are proven to work. So check it out. And as we add more assets into that digital course, whoever gets in right now, we will give access to anybody at that point. Whenever we get into any digital course on our website, we will have access forever to any other asset that gets added into that digital course. And we are growing each digital course that we create here to emphasize more on each topic. So we will not stop growing that asset as we go along, because everything evolves and we are going to update it. We are going to add interviews with wealthy entrepreneurs, celebrities, and we're going to have many other assets that will help our community become wealthier. That's the ultimate goal, successfully and legally. It's all about keeping our money multiplying. It's not about making money and then having to give it back to the government via taxes. It's all about learning how to create the right type of income and utilize a tax strategy that can allocate our money into the right places so that we can keep more of our money working hard for us even while we're sleeping, right? That's the whole purpose, to become wealthy fast and keep that money growing. Pass it down generations, because we have real assets that we control with our companies. We're not giving our money away to anybody to invest it for us. We're doing it ourselves. We have a business plan. We're raising the capital. We're putting the team together, and we're doing everything that a business owner and an inside investor does. Many are involved in a pyramid or Ponzi scheme today without even knowing. Are we being taken advantage of without even realizing it? We must value our time, which is the most precious asset we all have, together with our mind and freedom. We don't ever want to jeopardize on those three assets. That's why we always protect them. We don't sell our time. Unless you really love your job and you like to do that, then that's all good. However, we need to learn how to also multiply that money that you're creating through earned income, because at some point maybe that person wants to grow, wants to do something else different, or wants to create a new solution for the world and help the world become a better place. Many are involved in a pyramid scheme and they don't know it. So we need to become aware of how to avoid pyramid schemes. Majority of people end up selling their time for money, working for earned income, which is taxed at the highest bracket of the three types of income that we can build. When in reality, we can make money, work hard through sound investing without ever having to sell our time for money, working to build passive income or positive cash flow, and multiplying money through sound investing. That is rule number one in our community here, Master Investor, because that's what the wealthy do. The leader of the biggest Ponzi scheme in history, Bernie Madoff, is probably someone we have heard of. If not, we should learn more about him and others like him to avoid being like them and associating with anyone who is like him. When we have financial education, because we invested into our own, then we have an unfair advantage where it gives us the wealthy entrepreneur's eyes. We get to spot all the red flags of a toxic business people and fraudulent investments. We have the basics and mastered the new rules of money to become extraordinary at the game of money in real life. Madoff was given a life sentence for Ponzi scam, and this happened in April 2021. He passed away at the age of 82. He entered a guilty plea to the charge of cheating investors out of $65 billion, wiping out many people's retirement plans, life savings, investments, and aspirations. He ruined his clients' lives while amassing enormous wealth for him and his family. The most important factor is our degree of financial literacy. We will have the self-assurance and clarity necessary to find a path that complements our personality after we begin learning more and more a route that enables us to concentrate on our strong points while fostering the development of our deficiencies and creating a team that complements each other. Having smart people, professionals, and specialists working for us. Remember, as a business owner, we are, and as an inside investor, we are generalists. We know a little bit about everything. We specialize in multiplying money and sound investing. That's what we specialize. However, we find a specialist. So we have the CPA, we have the attorney, we have the broker, we have the stockbroker, we have the real estate broker, we have our bookkeeper, etc. We have our marketing specialists, and we have different departments in our organizations as we grow. Today, we can use systems and we can use artificial intelligence to offset the cost of the business cost, of the business expenses. We can actually keep more of the money because we can utilize artificial intelligence instead of humans, and we can get things done faster and more precisely in many occasions. However, that's just an opportunity for everybody to take advantage of, is that we have technology today that we never had before. 50 years ago, people couldn't do what we are doing today. So don't sleep on today's opportunities, because I bet people 100 years ago, 50 years ago, probably wish to be living right now in these times when they started out their businesses, because the technology is an unfair advantage. Artificial intelligence, everything is easier, and we can sell worldwide instantly because we have the ability to put a product in front of billions of people at the same time using smart marketing and the platforms that people are often using during the day. We can put that message in front of them so easily that they can grab, purchase, and come back again to our business. And the whole goal is to do that on autopilot. We're going to learn how to do that, and more importantly, we're going to learn how to invest like the ultra wealthy do, because we have the wealthy context. And this is what the government wants us to do. As we create more jobs, the government becomes our partner. So the government specifically wants us to create more jobs, right? Provide affordable housing. And who creates more jobs and provides affordable housing? Business owners, inside investors. And who receive tax breaks to encourage job creation? Business owner. Receive tax breaks to encourage housing? Inside investor. A Ponzi scheme, what is it? Few individuals genuinely understand what a Ponzi scam is. Even if most people have heard of Madoff, this is a serious issue. Millions of people unintentionally fall victim to both legal and illicit Ponzi pyramid schemes as a result of this lack of financial literacy. To put it another way, many individuals are unaware that they are being conned in the same way as Madoff's victims, even though they may feel sorry for them or laugh at them for being wealthy people who lost money. It's important that we learn even about the boring things when it comes to business. The more we know, the more control we have, and the more we will avoid fraudulent operations and investments. It's that simple. Knowledge is the new money. Knowledge is power, specifically financial knowledge. So we need to become partners with the government, because we are creating jobs. We are investing in sectors that they want us to invest in, such as housing, meaning real estate. We're building businesses that create jobs, that solves problems in the world, helps our communities, help the country's economy overall. And we can impact an entire world today because of technology. We can sell worldwide. We can have an online store basically set up within hours. And artificial intelligence will have our first ad rolling out within minutes, because, like I said, today the technology in artificial intelligence is so advanced that with few clicks, we can be positioned in the marketplace selling the type of products that we are passionate about selling, because we want to solve that problem in the world. So think about that as we are growing our business portfolio, as we are growing our investment portfolio. We want to think about the type of legacies that we want to leave to the world, what type of positive marks we want to make in the world today. what type of fields we want to go. Let's study our niche. Let's figure out how to start bringing a product into the marketplace and launch it. It doesn't have to be perfect because we are going to get feedback from the world. We need to update as we grow. We don't need to wait until it's perfect. We need to create a prototype and launch it. If it's a physical product, whatever the product may be, we need to be on the market and we need to get that feedback. Today, we can be selling worldwide within minutes and a few clicks, literally, without any exaggeration. There's zero reason why somebody shouldn't be making the type of wealth that they want to, or building that and creating that plan that takes them towards that, because today we have the access of information and all the tools that we could possibly ask for. The fondant tale of Ponzi. In honor of Charles Ponzi, an Italian immigrant to America who discovered a clever technique to make money, here's a brief history of Ponzi schemes. In the days following World War I, Ponzi, 1882 to 1949, devised his plan in Boston using the international reply coupon, a method of prepaying international postage. Ponzi coupons purchased at a discount abroad might be redeemed for a larger sum in the U.S. due to a peculiarity in currency exchange. Ponzi claimed that by purchasing and reselling the coupons, he could double investors' money, and initially it was successful. Ponzi received the money, paid out large profits, and then received even more money from investors, up to $1 million a week in 1920, which was a lot of money for that time. However, Ponzi's deception was exposed when a publication reported that there weren't enough coupons in the globe to fund his scheme. He has simply been using the money from his latter investors to pay off his early investors. He had not been investing in coupons at all. The people that have fallen for such a scam or anything alike is because they lack the 3 E's of a business owner and inside investor, which are financial education, financial experience, and excess of cash flow. As we gain financial education, we gain control over our investment and cash flow. That is key to be able to strive in business and stay out of the fraudulent investments that exist, even the ones that are legal. However, there are liabilities for the investor. While Ponzi was in prison, several of his clients filed for bankruptcy. The sinister reality of Ponzi schemes, the reasons why even sophisticated investors fall for them. The truth is that not all Ponzi schemes are unlawful, despite the common misconception that they are run by dishonest persons. In actuality, governments not only encourage but actually legalize some of the largest Ponzi schemes, including one larger than Madoff's. Those who have the money make the rules. As the adage goes, by being on the right side of the cash flow circle, we can play by the rules of the wealthy and profit from them legally. As we can see, we have the diagram of the cash flow circle on our screen. On the left side, we can see the employee, which has a job and works for earned income, pay the highest in taxes, about 40% in taxes. And then we have the self-employed who pays 60% in taxes. That person owns a job basically and lacks systems and lacks financial education ultimately, right? The left side of the cash flow circle, the mindset is the poor mindset. They operate with the poor mindset. And on the right side of the cash flow circle, as we can see, we have the business owner, which pays about 20% in taxes and at times even zero, because we can minimize taxes all the way to zero through business expenses legally with the right tax strategy put in place by the right CPA and legal attorney. And then we have the inside investor, which pays zero in taxes because we are using the money to invest for passive income and we are using debt as much as possible. We are investing in real assets that creates jobs, that provides housing and other goods and solutions that the government wants us to invest in, because we need more solar energy, we need more housing so that people can have options to live in, food supply, etc. All of these sectors that are listed in the tax code, which is basically a package of incentives for business, for the business owner and inside investor, those on the right side of the cash flow circle. So if we want to minimize taxes and we want to have more freedom, we need to operate with the wealthy mindset. We need to have the wealthy context. We need to be on the right side of the cash flow circle. And it starts changing our core values about money and the way we approach it and the way we plan about it. Let's examine a few of the most well-known legitimate Ponzi schemes. Ponzi schemes, sinister reality, why even sophisticated investors fall for them. Although many people believe that Ponzi schemes are illicit operations run by dishonest people, the truth is that not all Ponzi schemes are unlawful. Actually, some of the largest Ponzi schemes, even larger than Madoff's scheme, are sanctioned by governments and are lawful. The adage, those who have the money make the rules, applies here. Let's examine a few of the largest legitimate Ponzi schemes now in operation. Number one, Social Security. Money is taken from young people and given to the elderly in order for Social Security to function. The issue with Social Security is that, according to Master Investors' assessment, it will implode sometime around 2040, just like all Ponzi schemes do. For this reason, the majority of young people anticipate seeing extraterrestrial life before they ever get a Social Security check. That's why it's important to take control over our finances. Even if a person loves the job, they should learn how to invest so that by the time retirement comes, you have the right assets pumping in cash flow into that person's pocket that will replace and supplement the job's income. And hopefully that person is not only relying on Social Security, because it's going to be probably depleted by then. We need to take action in our investing. We don't need to be passive when it comes to investing. We need to be active, meaning that we have a voice, that we have control over our money. We're not giving our money away to the 401k. We're not doing any of that. We're not giving our money away to anybody to invest for us for 8 years. We're not doing that. We are actively investing. We are building our business. We are going to launch the company. We're going to get the website done. We're going to start driving traffic to the website. We're going to build our assets column with real assets that produce passive income. That's the key to building true wealth. Number two, the market for stocks. The fact that most investors are aware that anything might happen to them at any time is the reason why so many believe investing is dangerous. The majority of early investors wait for a stock's price to rise as a result of additional capital entering the market before seizing their gains and fleeing. Today's high-frequency trading, HFT, and algorithmic trading have made the stock market an even bigger Ponzi scheme. Giant investment firms that have the funds to purchase and run multi-million-dollar computers that can execute thousands of trades per minute are involved in HFT, or high frequency trading. These houses, they trade, whereas the big houses trade in milliseconds. Let's talk about suckers. The majority of investors in capital gain schemes are those that wager on the price of assets like stocks, real estate, gold, or collectibles rising. Late investors lose and early investors profit. And it's because they focus on capital gains income and they lack financial education. When we consider that the majority of people invest in 401k plans for their retirement, this becomes particularly problematic because the stock market is solely supported by 401k funds. Successful investors believe it will crash. Smaller generations won't have enough money to replace the money taken out by large generations when they retire. Number three, taxes. Taxes, politicians and bureaucrats collect taxes and give them to their cronies and family. The issue with taxes is that they inefficient handle the money that is stolen from the efficient. And we can minimize taxes legally. Even though that's the reality, we can still legally minimize taxes because the wealthy do not pay taxes. At least the smart businessman and the smart inside investor, because we have the right strategy. We have a tax strategy specifically catered to the amount of money that we're making every single day, every single year. Therefore, every single dollar will be allocated in the right place so that we can minimize taxes all the way to zero as much as possible legally. We can document everything. It's not about hiding money. We should never hide any type of income or money of any investment to some sort of minimize taxes. That's not how we legally do it. We need to do everything via the law. We don't jeopardize our mind, freedom, and our time. We are building true wealth. 4, pension schemes. Legal pyramid schemes make up the majority of pension programs. Pension programs rely on contributions from younger employees to cover the cost of retired employees. Underfunding is one of the main causes of the problems facing so many pension schemes. In other words, the old men are doomed if new employees do contribute or if the stock market does not suddenly rise by 20% annually. The insurance provider for these pension systems, the Pension Benefit Guaranty Corporation, or the PBGC, is likewise insolvent. For baby boomers who took part in legitimate Ponzi scams, retirement is a financial precipice. Once more, see who stole my pension. How can we stop the looting for these types of scams? How can we stop Ponzi schemes? And the way to stop it is by investing in our financial education, taking control of our finances, taking control of our investments, our decisions when it comes to investing. We have a plan, whether it is building a website, like I said, launching our business, and start studying our market, our niche, building a true brand, and taking control. It's better to have control than not to have control when it comes to our investments. People that lose their money and end up having a bad taste when it comes to investing are those who give up their money away, give up their control, their decisions, and they end up losing, and they don't end up making passive income or capital gains income, right? Because those are the two types of income that we can get from a successful investment. Either capital gains income or we're going to get passive income. And as an inside investor, we know exactly what type of income we're going to get before we even invest into that investment. Network marketing is not a scam. The majority of conventional companies, including IBM, are perceived by some as genuine pyramid schemes. The majority of people are at the base of a pyramid, whereas there is just one person at the top. That individual is typically the CEO in the corporate world. There can only be one winner. There's only one seat at the top of the corporate ladder, and it is a win, lose, dog, eat dog situation. The reverse is network marketing, with the base at the top and the point at the bottom. It resembles an inverted pyramid. The goal of the entire company is to elevate as many people as possible to the top. Network marketing is not dog eat dog. Rather, it only succeeds when we help our friends and family succeed and our team. Regretfully, a lot of people give up before they reach the pinnacle. They return to the true pyramid scheme after quitting, frequently working at the base of the pyramid and gazing up at someone else. Learn from the experience of others in Ponzi schemes to avoid them. We must do our due diligence on every investment we ever get involved. We must make sure the investment, team, financing, and cash flow are all legal. And we have to understand via studying the numbers of that specific business from the financial statements. We must have a plan and action before we invest. Investing is defined as having a winning business plan with a lucrative exit strategy. A person who invests without a business plan is a gambler and a trader, not a true investor. Cash flow are the most important words on the business language, and the second most important words are due diligence. By respecting the most important words in the business language and applying them into our investments, we will ensure to avoid Ponzi schemes. Many people, without knowing, have been exposed to a real scam, which is an unlawful Ponzi scheme. We have seen them in all shapes and forms, from having people thinking that going to a business party where the attendees must bring, for example, $1,000 to a party that a friend had invited them to go to learn about getting rich. Many people have fallen for this type of Ponzi schemes. Even today, they still do it foolishly. For example, many people give thousands of dollars to the party host in less than an hour. The attendees are informed that they might earn $50,000, but only if they invite 16 additional people to the party, each of whom will need $1,000 or whatever the amount the host is requesting. The pyramid fell if anyone didn't bring and 16 additional people. It goes without saying that the pyramid will always fall at some point, and someone stole their money at the end of the day, because that money will probably not be recouped by those investors that were uneducated, financially literate. That's why they end up in that position. A person that has financial education will never give their money away to somebody. First and foremost, we know exactly how to take action when it comes to investing, and we are involved in every single decision. We actually control the company, the investment company, whatever we create the company. We launch a company, we incorporate the entity. No one is going to make the decisions for us. We have a team, we can consult others, we have mentors. However, final decision is taken by us, the inside investor, a business owner. So we need to focus on keeping control over our money. Don't give the money away to anybody. And start using the money to improve our financial IQ. Invest into a mentor course. We want to learn how to get involved in Airbnb or commercial real estate, and we have to acquire a class from a mentor that has already done what we want to do. Okay? That is a good investment because we are improving, and we now have a close relationship with somebody who has win in the field that we want to win. So we need to have investors. We need to invest in our team. That's for sure. But don't give our money away to anybody else to invest it for us. We're going to invest in our financial education, but when it comes to investing, we're taking action ourselves, and we're building a business plan that has a lucrative exit strategy for us. And that is what investing is having a business plan that has an exit strategy. A lot of times, these Ponzi schemes are painted through business opportunities that are toxic. Once a person does due diligence into the business, he or she will find out that such is not a sound investment. As we have learned here at Master Investor, we must keep control over our investments. We should not hand out money to anyone to invest it for us. That will mean the investor lacks financial education, financial experience, and excess of cash flow, the 3 E's of an inside investor. Other scammers will come in the idea that they are a hedge fund manager. Many of the scammers will claim that they possess the touch of magic when it comes to investing. Once more, many learn about these Ponzi schemes via a reliable friend who also invited others to the business party so they could meet. The guests at the party are usually successful, smart, and wealthy. The return of the scammer was producing thrilled them. However, with financial education, we will not be thrilled by any presentation because we want to look at the numbers. We want to study the facts. We invest with facts. We don't invest with opinions. An inside investor focuses on the numbers, on the truth, on the financial statement of that business that we are going to either acquire or build. We want to focus on facts. We want to look at data, and then we make a decision based on that data. And we know exactly how much money we're going to get back, how fast we're going to get the money back. Is a calculated risk. It's not just like many do, gamble their life away. They buy, hold, and pray that the market is going to go up so that they can sell it and make capital gains income. And then they pay taxes on those capital gains income because they don't have a strategy, and they lack financial education because they didn't have a plan to begin with. That's why they were holding and praying. That is not investing. And that's what majority of people teach out there in the world. We're going through the basics of business and investing. We're going into the heart of true wealth. And that's what this community is all about. We must always conduct due diligence of every investment we invest in. This can include traveling to the business operation where it's located to meet with the employees and tour the corporate office if it exists at all. It goes without saying that some Ponzi schemes are sophisticated and they may look completely legit from the surface, even to the point that their staff and quarters can be magnificent people at first glance. Ponzi scheme scammers may display their wall of fame, celebrity images, charity awards, and political civic honors during their presentation. They also emphasize their commitment of Jesus and their Christian beliefs at times to target people that are true believers. That is why here at Master Investor, we encourage all of our partners to commit to acquiring financial education daily and master the ability to read financial statements to know what is a true asset and what is a liability. Have we fallen victim to a Ponzi scheme? However, it wasn't the final scam. Con artists such as Ponzi, Madoff, or Golden Boy are typically exceedingly smart, charming, and persuasive, which qualities are needed when we are building a business. However, we're going to do it the legal way. We're going to be smart the legal way. We're going to be charming the legal way. We're going to persuade people for the right reason because we have a solution that works for them. We have a product that is solving a problem that they currently have right now. And we're doing something that is based on the law. We're going hand to hand with the law because we are protecting our most valuable assets: time, our minds, and our freedom. We don't jeopardize those three assets for anything. Their success can be attributed to their ability to deceive others. Intelligent people, their buddies inspire us to believe in them because they do. In order for a Ponzi scheme to succeed in the first place, they must be convincing to others. So they try to sell us a good story. We need to look at the numbers. We don't want to hear opinions. We don't want to hear dreams. We don't want to hear any of that. We want to look at the numbers. We want to look at the business plan that we have. We want to match the numbers. We want to do our calculations. We want to go through the facts. We need to look at the entity. Is it a real business? We need to look at the history of that business, and we need to do our due diligence. That's why they're the second most important words in the business language, because once we do due diligence, we will be able to tell whether something is an asset or a liability. Asking oneself, am I in a Ponzi scheme, requires introspection and financial education to determine whether something is a scam. Bonus: what are tax deductions versus tax credits? To keep more of the hard-earned income, a person must comprehend the distinction between tax credits and deductions. Unexpected, the tax code was created to benefit the business owner and inside investor, not the employee and self-employed. The business owner and inside investor, those who are playing on the right side of the cash flow circle. Being wealthy is more about how much we can keep working and sound investing than how much we can earn, right? Because a lot of people make a lot of money, but they don't keep much because they end up giving that money away back to the government via taxes, like the employee and self-employed do. Anyone who is financially literate, not the affluent, wrote the tax legislation. Anyone can make a lot of money and still not be wealthy. It all depends on how the money was truly made. Three types of income: earned income, capital gains income, and passive income. Remember that earned income is the type of income that people exchange time for money. They have a job, they sell that time, they get a paycheck, and they pay the highest in taxes. Capital gains income comes from investing, and we have to pay taxes on capital gains income, but we can often defer those taxes by following specific strategies within the law. In real estate, we have something that is called 1031 exchange, and that's when we roll the capital gains into a bigger asset in real estate, and therefore we can defer taxes on those capital gains. So and then we have passive income, and passive income is taxed at the lowest bracket, and it requires a higher level of financial education. And that's what's important, that we continuously invest in financial education through mentors, digital courses, going to networking events. A lot of times they're always around our areas where we reside. So take a look at the community where we are today, and we can find many events that can help us in our businesses. It can help us grow our networks, and it can help us grow the bottom line of our businesses, the cash flow. So we want to focus on building passive income. That's the type of income that we focus on here at Master Investor. Rule number one is that we work to build passive income and multiply money in sound investing. Many may have a large salary, but also a lack of financial knowledge. Taxes and costly responsibilities such as the mega mansions, luxury automobiles, and extended vacations contribute to the financial loss of many high earners. However, that's not the issue. It's not the luxury items, none of that. Because as I mentioned earlier on our talk, becoming wealthy is not about shrinking. It's the very opposite, about expanding. It's about always living above our means. That's why here inside of our community at Master Investor, we encourage our entire community to always live above our means, to always expand, to always grow, not shrink. Don't save money, invest money. If we're going to be saving, is to invest. We're going to save an amount, or we're going to put away an amount of money until we reach a certain amount so that we can invest it into a specific asset that we have done due diligence on. We have a business plan for it, and we have all the requirements that must be established to create a successful investment and to acquire a real asset that produce passive income. That's the goal, is to have assets that are giving us passive income even while we're sleeping. This information will not address the fairness of the current tax code. Regardless of how one feels about this tax code, there may be grounds for complaint. Rather than getting angry, this talk will teach us how to lessen our tax obligation by making smarter decisions. As we know, the highest expense majority of humans have, according to case studies done, are their taxes. Learning how to minimize taxes legally by using the tax code to our advantage and following the law is already an unfair star among the rest of the world, because majority of people, the highest expense that they have at the end of their lifetime is their taxes. So if we can learn from now how to minimize taxes legally, it's not about hiding money, right? It's not about hiding income. It's about documenting it correctly and having the right tax strategy in front of it with the right CPA, the right tax attorney. We need to prepare. It's better to be prepared for an opportunity that never shows up than is not to be prepared and the opportunity does show up. We want to be prepared for any type of economy. The economy goes up and down, and we make cash flow. We make passive income in any type of economy. That's what a true inside investor true business owner does. We can make money in any type of, and when the economy crashes, that's when we actually make even more money. Majority of people panic during a crash. We actually focus and we capitalize on all sorts of great opportunities that actually come from that same panicking that the market experiences once in a while. So we need to be prepared for any type of economy. And the way we beat inflation and beat any type of economy is by diversifying among the 5 asset classes that exist. Number 1, real estate. 2, business. Number 3, paper assets. Number 4, crypto. Number 5, commodities. They all require financial education. That's why it's important that we begin to figure out which is the first asset class that we're going to build. And if a person has no assets, then we should focus probably on the business and the real estate and the crypto, right? Something that will produce passive income. It will be a business that we control, where there's a website and we're launching a new product. We're doing white labeling. We're using other people's products that are already created. We don't even need to have the product in our hands. We can do drop shipping. All we have is the marketing. We have the website, and the product gets shipped right from the factory. All we do is acquire the client. We send the order into the factory, and the factory sends the shipment into the client's location with our brand and our logo. Of course, the client will never know that it's coming straight from the factory. So we don't even need to touch the product today. Think about that for a second. We can be selling worldwide within clicks and within minutes without any exaggeration. Take advantage of all the tools and artificial intelligence that is available to all of us. And majority of the tools are free today, okay? So we need to focus on building passive income. That's the goal and that's the message. And minimize taxes legally. There's no reason to do anything illegally when it comes to business, because it's easier to become wealthy legally than is to become wealthy legally. That takes too much effort and too much time, and it jeopardizes the 3 main assets that we all have: time, our mind, and our freedom. And we don't ever want to give those 3 at all. We don't ever want to even come close to losing any of those, ever. Those 3 things we cannot replace. Learning how to minimize taxes legally by using the tax code to our advantage and following the law. When we obey by business law and the tax code, we get the government as our partner in our business operation. In other words, we use the government and its tools for leverage to create more wealth for us legally. Here at Master Investor, our team and tax advisor discuss the 2 rules for increasing our income. All we need to do is alter our information and apply that information into our life. That's how we turn somebody else's knowledge into our own knowledge. Not by just reading it or listening to it. It's by actually taking action and applying that into our life. Whatever we learn from that person or that entity, we are applying that immediately into our life, and we're going to get a result. That's how we turn somebody's knowledge into our own knowledge. We need to take action with that information that we're getting from our financial education and mentors. Every dollar, pound, or euro we spend may decrease our taxes. And every dollar, pound, or euro we make can increase our taxes. So think about how to lower our taxes legally through business and actively investing for passive income, utilizing as much debt as possible. Our first lesson in leveraging the tax code to reduce our tax liability is provided below. Comprehending tax credits and deductions. The secret to maximizing tax savings is understanding tax credits and deductions. Credits directly reduce the amount of tax we owe, whereas deductions can greatly decrease our tax obligation by lowering our taxable income. Knowing how to use this can help us keep more of our money working hard in different assets. That's the whole goal, to keep money moving fast from a cash flowing asset to another cash flowing asset. We get a new liability, we're building a new asset, and that asset's revenue or passive income is being used to satisfy the liability and also satisfy other investments that we're going to be acquiring. So ultimately, our businesses will buy other businesses and will buy everything in our lives. So everything will be for free at the end of the day because our businesses are paying for that. And that money is coming from the clients. So it's not coming from our hard-earned income. It's coming from the cash flow of the business. The business is working hard to solve a problem. And because we're doing that successfully, then we get rewarded via passive income. And we can utilize that to satisfy any type of liability need that we may have. Tax deductions. A tax deduction is a decrease in taxable income that is usually brought on by expenditures, especially those made to generate additional income. Along with credits and exceptions, tax deductions are a kind of tax incentives. The distinction between deductions, exceptions, and credits is that deductions and exceptions lower taxable income, whereas credits lower tax liability. The Trump tax plan, which was implemented in 2018, nearly doubled the standard deduction for all filers, although his tax strategy for 2025 is still being finalized. Your 2018 standard deduction was $12,000 if you were a single filer of if the person was married and filing separately. Heads of household receive $18,000 while joint filers receive $24,000. However, that tax plan did significantly alter several of the popular tax deductions from prior years. Some common tax deductions include deduction for state taxes, deduction for mortgage interest, deduction for property taxes, deduction for moving costs. Equity debt for homes. Tax credits are a direct decrease in your taxes that we receive when we are doing specific things that the government wants us to do. We just need to find out what the government wants us to do and be aware that there is a tax credit for doing it. We may even be doing these things without being aware of the available credit. Tax credits are the pinnacle of tax savings since they reduce our tax liability dollar for dollar, unlike a deduction, which just lowers our taxable income. It is not. It offsets our taxes directly. As a result, a 1,000 tax credit lower our tax liability by 1,000 regardless of our tax rate. Among the most well-known tax credits are investment tax credits, charity credits, working poor credits, education credits, family credits. A direct subsidy is a tax credit. The government doesn't send us a check because it is far easier for them if we submit the credit on our income tax return instead. Additionally, tax credits are never as politically acceptable as subsidies. Furthermore, the government isn't as financially burdened as it would be if it issued you a direct check because not everyone has the financial literacy to request the credits. Common misunderstandings. One very harmful misunderstanding about tax credits is that they are all refundable despite their attractiveness. In practice, certain credits are non-refundable, which means they can lower our tax obligation to zero but not generate a refund. On the other hand, many individuals err in thinking that a high income automatically makes them ineligible for certain credits or deductions. Consulting a professional is essential when filing taxes and preparing with a tax strategy for the year ahead, because misunderstanding these concepts might result in missed opportunities or inaccurate tax returns. Get professional advice. Get the right CPA. Not all the attorneys and all the CPAs are for the wealthy context. Some of them are for the poor mindset, and we cannot take the time to change their mindset. We need to find proper CPA and tax attorney for the wealthy context. Tax deductions and credits that we may not be aware of might be found with the help of tax professionals. Furthermore, the tax legislation is constantly changing, adding to the existing complexity and making it difficult for the average person to stay current. To ensure that our choices are well informed and compliant, it is critical to boost our financial education while seeking individualized guidance. Tax season shouldn't be stressful. It is helpful to see the tax code as a tool that can greatly lower our tax liability when used correctly rather than a burden. Consider how we may be someone who stimulates the economy, creates jobs, or both while doing our taxes this year through our businesses. And this way, we will gain from the exact actions that the tax legislation aims to encourage. It will be better for our wallet and the economy. Remember that it is about retaining more money and multiplying it through sound investing rather than just making more money. We must learn how to use the laws to keep us as much as possible, and then to be able to create more passive income with new investments that we control, and using that passive income to buy other businesses and becoming more wealthy successfully and legally. Get Masters Investors ebooks now to discover more about how to benefit from tax credits. Start investing in high quality financial education, by reading our financial ebooks. What are the 10 new rules of money? How to build cash flow with the internet, turn passive income on. How to invest in crypto to build wealth, understanding Bitcoin and blockchain, the rise of legitimate reserve digital currencies and assets. It's all about diversifying among the 5 different asset classes. That's how we protect ourselves from down economies and hedge for inflation. And inflation will continue to rise because, as we know, today's monetary system works with debt. After August 15, 1971, that's when President Nixon separated the gold standard from the US dollar. And from that point forward, money became monopoly money, fiat, debt, and just an idea backed up by confidence. It became a full currency. It must move from asset to asset to maintain its value. Otherwise, it goes back to its intrinsic value, which is zero. Every currency in the history of humanity has always gone back to its intrinsic value, which usually is zero. So today, it has lost about 90% of its value. And the more we print money, the more the government prints money, the more it loses value. And we need to understand that money is no longer real money. It's a currency, and it's fake money, and just an idea backed up by confidence. Today, money is debt. We need to be in as much debt as possible. We don't need to be afraid of debt. We need to utilize debt for leverage because debt is money, and we need to treat debt like we treat money to invest for passive income and minimize taxes legally to zero so that we can create true wealth. Make sure to get our other tools and resources on our website. We also have social media. We have Instagram. We have the podcast. We have the newsletter available. Subscribe to the YouTube channel. Find us on TikTok. Get to our website. Get our digital courses. And it's a great time to invest in our digital courses because we are adding more assets to them as we grow our community and we get more financial education in each course that we have available on our website. Let us know if we have any question on today's talk. Master Investors' mission is to be able to be the global authentic brand of money, business, and investing that elevates the financial well-being of humanity through high-quality financial education made simple. We look at opportunities to build passive income, win-win partnerships, and true wealth. Thank you for listening, and thank you for your time in business. Once again, I'm pleased to be here talking about money, business, and investing. Stay extraordinary and wealthy, bringing you the good and bad news of money, the business principles at work in all economies. Talk to you next time. Bye for now.